Okay. Welcome everybody from wherever in the world you're joining us right now, whether you're joining us through YouTube, whether you're watching us on your phone, whether you're at the office, wherever in the world you're joining us, a massive welcome. This is Dollars for Lunch. This is our Wednesday free edition, and by all you should know by now, I am Dane van der Mas. We're going to be having some fun together. We're going to be diving into the markets. I'm going to be showing you some of the upcoming opportunities that I'm looking for, and I think there's going to be some really powerful trades we're going to be able to take this week. So first and foremost, guys, let me know where in the world you are joining us. I can see Daniel's from Blantyre, Malawi. We've got Northern Cape in the house. We've got Pretoria in the house. Many people know exactly what to do, but go ahead and let us know where in the world you are joining us. All right, so I'm going to jump straight into the markets. We're going to start off with some of the fundamentals, and I'm going to show you about 7 or 8 charts of trades that I'm looking forward to taking, one of which is going to be gold. We should be able to take that trade live today directly once the show's ended. I've got a specific time that I think this one is going to pop off, and we're going to have quite a bit of fun together. Okay, so let's jump into it. As always, we're going to start off with some of the fundamentals in terms of some of the big items that we're looking out for this afternoon. Now, in terms of the one we're looking at specifically that I think is going to have a decent impact, this is going to be Core Cpi month on month for September. This is on the United States dollar. Now, on the Core Cpi, there is a slight forecast of 0.2%, but we obviously are looking out for a number that is going to obviously beat that or come in short of that particular number. Now, in terms of the history for Core Cpi, if we have a look at the charts here, we can see that we have these spikes of these unexpected massive numbers, and then we very rarely get a negative number here. Now, we're sitting quite close to that 0.1, 0.2 range, and it would be a really amazing thing should we get a positive number. Now, based on where the markets are, where some of the fundamentals are lying, I'm expecting a bit of a positive number here from the dollar, and I'm going to show you where the dollar index is sitting. Should we not get a positive number, it's going to mean a whole set of things we're going to end up doing in the markets. Now, the dollar is sitting at a teeter right now, and when I get to the dollar index, you're going to see what it is that I'm saying. We're either going to see massive growth over the next coming weeks, or if we start to get some bad fundamentals today, tomorrow, and Friday, we are going to see a break in structure of the dollar's strength across all of the currency pairs, and the markets will definitely try to take advantage of that. So let me show you what it is that I'm anticipating or that I'm seeing on the dollar right now. So when we look at the dollar index and we look at all currencies and charts here, the dollar index is an amalgamation of all other currencies, right? So the dollar, or how its performance is against the euro, the pound, and the yen. And it's most heavily weighted against the euro, obviously, then the pound and the yen. If we see the dollar making gains on some of these currencies, this is where we see the index pulling up. Now, this is just a very general way of looking at the dollar's trajectory and its strength across some of the forex markets. And this helps us to position it specifically. If we know there's dollar weakness, we can take advantages where, the dollar's the base currency. So USD, JPY as an example, we see dollar weakness, it'll buy less and less of the yen. When we see dollar strength, it'll buy more and more. Where the dollar's the quote currency, we will see where the dollar loses strength, we will see that chart rise. And if it's the base currency, if the dollar gains strength, we'll see that, if we see that, 100%. So if we see it as the base currency and the dollar gains strength, we will see that chart rise as it'll buy more and more of the particular quote currency. If we see it as the quote currency, we see the dollar raise in strength, we'll see that chart fall, and inversely. So it's just a really great tool on the forex side of things, just to understand if we know where one currency is, we can generally map out where they should go. And obviously when we have price action aligning to this, it gives us a really great opportunity. So looking at the dollar index, we've seen it's been in a pretty much a downward spiral over the last couple months, mostly coronavirus related, and we saw a breakout starting in between the 21st of May this year, and we're starting to see a new trend, a new rally of the dollar against other major currency items. Now, the rally broke out, we came back to support. Now we're in this new state, and the state that we're seeing is being confined between some of the FIB fan levels And I want to focus today specifically on this structure that we're seeing right here. So what we can see is we've got a decent level of support. We are aligning with our 61.8 Fibonacci Fib fan here, and we've made all these highs here. Now we are in a very delicate market structure. I'm going to do one more zoom in. We're on this very delicate bull impulse of this particular structure. Now, where we are sitting, if we get some strong dollar news today, strong CPI data, we could definitely see a bounce off of this trend line here. And I'm going to zoom in even closer and show you what that market structure looks like. But what I'm worried about with the dollar where we currently sit is the fact that we are right up against this Fibonacci expansion level. And should we break this level of support, this diagonal here, you can map this out. This is a 1-day time frame dollar index. Should we break this, we can start to see a massive sell-off of the dollar, and specifically some of the major currency items, and then obviously things like ZAR and all these other things will take advantage of that. Now zooming in for a little bit of a closer inspection, right, you can see this market structure has been adhered to very, very tightly, and we tend to make these impulses and pullbacks towards the 50 fib level. Right now we can see a very similar thing happening here in the last 4-hour time frame, which just started at 11 o'clock today. You can see we've moved basically nowhere. Right, you can see that little star over there. Markets are waiting for the CPI data that I've just spoken about. That is coming out in the next 9 minutes. It'll come out probably as we're speaking, so we'll analyze that one live. So markets are waiting out for that. Should we get positive data, we could see a push, a impulse again off of this diagonal support level. We've broken out this little bit of a sideways movement. We've come back for a retest, we're now at that support. So the expectation at the moment is for, based on price action, some positive dollar CPI data. Now, should we get that, there's quite a few opportunities that I see us being able to take advantage of. The one that I see probably the biggest advantage right now is going to be on gold. Now, gold's biggest structure, as you all may know from previous shows, specifically if you are a master, is we are sitting at a very key level in the history of gold, right? We've got a massive support level. This is sitting on a daily time frame, and gold has been on a rally pretty much since end of 2018, 2019, right? We've been on this bigger rally now. Now, where we currently sit, we are sitting at a fundamental support level, right? We've pushed through it once, we've pushed through it twice, and we are currently in sort of a bit of a retest stage, but more of a meandering sideways market. The market hasn't yet positioned where, you know, it wants to go with the price of gold right now. So looking a little bit closer, we can see a expanding formation here, right? NFP last Friday, we caught a beautiful sell. We saw the markets get in some unemployment data as well as non-farm payrolls data. The data was mixed, but ultimately the US came in with great unemployment rates, right? They beat expectations by a substantial amount. The markets first interpreted this data as negative. I interpreted the data as positive with my master's students, and my master's students ended up taking sells once the spike had kind of completed, and we rode that sell all the way down towards the downside. But even though with that positive data, gold is really struggling to break up, and break up of gold. So for gold to move to the top side, it needs a weaker dollar. So a weaker dollar means that gold per ounce rallies in its price. A stronger dollar means that gold would fall, or the price of gold per ounce would fall. So we're seeing that gold's really struggling to really break out of this sideways symmetrical inverted triangle. And what I'm seeing for today is we might have a really good opportunity to look for some dollar domination in terms of a sell on gold. So we've got a bit of a market structure. We're getting a little bit of resistance at this level. And should we get some positive dollar data, we could then foresee a massive sell on this data. Now, where markets have spiked to is the absolute high of where I see gold is right now. And we've had a massive rally over the past I would say over the past day, or at least over the evening, from the close of US market to today, we've seen a weakening of the dollar and a strengthening of gold. So I foresee we could have a massive sell-off on this today if we get that positive CPI data in the next couple minutes. Now, something also, master students, we have a massive teaching session tomorrow. So for Thursday's Dollars for Lunch, I'm going to be taking you through my new and revised strategy, both for VIX as well as gold, as well as ZAR, and we may have enough time to get into that Nasdaq. So this is a complete science in terms of when to buy, when to sell, under what conditions are we looking for some of these buys and sells. So if you're a master student, guys, do not miss tomorrow. It's going to be Thursday at 2 o'clock, 2:15 as always. I don't know what you need to do. Take off time, do whatever you need to do. You do not want to miss this. I've spent this whole week ironing down the strategies to the point where you can look at market structure, make a determination based on price action, and literally put in pending orders and take some trades. And this is going to be massive profit. So that's just a reminder for all master students. So again, in the next couple minutes, the next 4 minutes, we may be anticipating a massive sell-off on gold. So I'm going to remember that. I'm going to try not miss that. In terms of VIX 75, guys, we have another similar opportunity. VIX 75, as you guys all know, is one of my favorite assets to trade, purely because the pip count is insane, right? On a daily move, you can bank anywhere between 500 to 2,000 pips in terms of daily swings. So for this reason, VIX 75 has been massively profitable. Now we're entering a new state, a new season, which is quite exciting. We've had a massive downwards trend. We've been trending downwards ever since we've had a data feed for VIX 75 specifically. This is a synthetic instrument. It is not tied to the inverse volatility of the S&P 500. It's a complete synthetic instrument that's traded via algorithms, or its data is brought or built by algorithmic data sets. So we've been mostly in a bearish market, and for the first time we are now in a breakout situation. Now, generally speaking, when we move into a breakout situation, the first thing to anticipate is a range in the market. Okay, so I'm on a 4-hour time frame, and what I'm anticipating is that we may be moving into a little bit of a range here on VIX 75, meaning we have opportunity to look for sell positions right here on VIX 75, which is amazingly exciting. So on VIX 75, on my personal side of things, I'm going to be looking for a sell opportunity, and I'm going to be entering into 2 or 3 sells on VIX 75. And what I'm going to end up doing here on this particular one is I'm going to be going in at this particular level. Now the reason being is that we've got a little bit of data. Right, we've got a little bit of data telling us what's busy happening, but we do have this range. Now this range is confirmed by this very structural, I love parallel ranges. So we have a parallel resistance, parallel support, and then markets start to trend. Now very specifically, I'm looking to try and, at this point, you are going to be looking at bigger stop losses here just because of the size of this range. So at this particular moment, you're going to probably be looking at around about the region of about 200 pips in order to be able to take this trade. So if you've got a very small account, I would not risk it at all, but I'm going to be looking at something of that nature, because anything higher than this particular level, then VIX is going to continue trending higher. But the goal here is to obviously look for and take this range into account. So with this range, we're looking at about 1,000 pips towards the downside. We're risking 200 pips towards the top side. So we've got a 200 pip stop loss and 1,000 pip TP. You can go ahead and follow me in a 4-hour time frame. You can draw out this market structure, and that should give you everything you need in order to capitalize on this particular VIX setup. Okay, we are 1 minute away from gold, so what we're going to do is we're just going to wait for this data to pop out. In terms of some of this core CPI, let's have a look what we end up getting here. And based on that, we will then look for an opportunity to position ourselves. Like I said, gold is positioned from a price action perspective, from a dollar domination perspective. For those of you who understand the dollar domination strategy that I teach all my masters, we are looking at set and ready for that reversal. What would be great is if we have a perfect storm situation where this CPI data backs up our price action in terms of what we want to do. And that's what we refer to, generally speaking, as a perfect storm situation. Okay, I got my notification. that it is now 2:30 on the dot. Let's quickly have a look. I'll refresh one last time. Let's see what we end up getting here. Okay. Okay, so CPI came out straight, but we got a lot of other positive readings, right? CPI month-on-month, CPI year-on-year was positive, and I think that's enough. And that's enough for what we need in terms of dollar domination in order to look for that downwards move in terms of where we are on gold. So on gold, I'm going to end up taking and also positioning myself here. I'm going to grab a sell where she's currently at, and what we need to do on the sell, because we can experience some volatility, the closest resistance level we do have is going to be above the previous spike, right? Above this previous spike that we've seen. And we would then need to be in a position where we are looking at around about 60 to 70 pips, somewhere around about there. Depending where you've entered, you could already be in a little bit of profit. Another thing that's going to help us from gold's perspective in terms of market structure is definitely going to be, I'm going to drop down to 5 minutes. What you can do if you are a little bit more conservative in your entries, what you can do is you can map out this market structure here on a 5 minute, and all you want to wait for is a break of structure. As we can see it busy pushing down right now, based on this market structure, you can see that that push is already happening. So depending where you've entered, you should already be in profit. And then obviously bear in mind the stream is delayed by I think about 10 to 15, maybe even 20 seconds or so. But if you want to wait, you're welcome to wait for a break of market structure, and then you can obviously enjoy a benefit of a little bit of a sell on gold. Should the structure break, my advice would be then to move your stop loss into entry, right? So should the structure break, which it's really looking like it wants to, I would move stop loss into entry, and then you are good to go. All right, so gold is moving nicely into profit. Let's just see how many pips there. You should already be about 40 pips in profit just on that quick move over there. So we're going to continue. We're going to move on because that's already a trade nicely in profit. VIX also should be already in profit. Let's move on to Nasdaq. Okay, so Nasdaq, what I'm busy seeing right here, right now, is that we had an opportunity, I think it was last week, to catch Nasdaq off this 50 fib level. Now, what we've noticed here is that Nasdaq is trending very nicely within a channel, right? US 100. Now we do have some big earnings reports. I believe it's JP Morgan that has their financials that are being released today. We have quite a few different financial reports that are busy being released today. The Masters Group has all the details on that. Now we want to obviously pay attention to any big technology news that could threaten this market structure. So, you know, your Facebooks, your Apples, any big technology company that is part of US 100, which is the top technology entities publicly listed in the United States. Anything big like that could jeopardize this particular trade, but if nothing big happens, this is what we're busy looking at, right? So Nasdaq has pulled back down previously to the 50 fib level. Now we missed it because it didn't really intrude or really press into that 50 fib. We kind of were in a situation where it pressed and then it sort of it bounced off. It didn't really get into that zone. Now we've seen previously that Nasdaq has a trend of pulling back into that 50 level, sometimes even the 61.8. But for the purposes of this particular trade, we're seeing that there's very high likelihood of the fact that Nasdaq will pull back to the known 50 fib level, as we've seen over here, pull back to 50 fib level within this structure or this market channel. And that's what we're busy seeing right now. Now on closer momentum or closer perspective here, right, I'm seeing a little bit of an expansive market structure here, which tells me that we certainly have the opportunity for Nasdaq to make a deeper push. Now, for you on your charts, if you want to follow me on this one, that 50 fib level, I'm just going to drop down to a 4-hour time frame. That 50 fib level is located at 14,323. So 14323 is where that 50 fib level exists. Now again, Nasdaq does not have to just, you know, come to that level. 14,300 is roundabout where that 50 fib is, and you can deal with this in multiple ways, right? You can either set up a buy limit, so a pending order to catch that level with a stop loss, right? A recommended stop loss of at least halfway through 50 and 61.8. So in order to get those levels, all you're going to do is deploy your Fibonacci from left to right. If you don't know how to do that, it's in my academy for free. I teach about how to deploy Fibonacci. Actually, the whole academy teaches you about everything that you have to do. So in order to be able to take this, we're looking for a 50 bounce, and that 50 bounce is where we want to look at this. So a pending order at that 50 fib level, and I'm speaking about this now. Obviously, I'll deal with this on a day-to-day basis with my master students. We have live broadcasts every day where we trade together. But for those of you who are joining us for free and you want to take advantage of that, this is how you can potentially set this up. You're welcome to rewatch this. It is a live broadcast, but it will stay public for you to be able to go after the fact and just double check what it is that I've done here. But that's the opportunity that I'm looking out for on Nasdaq. Moving into the South African Rand, we're seeing an opportunity for a little bit of a range. Obviously, the South African Rand is quite a mixed bag at this moment. We've been in a constant up market, a constant bull trend. Everybody knows the South African Rand hit 1787 in 2016. We then 1571 in 2018, and then obviously the peak of coronavirus, when it physically actually made an impact here in April. We then peaked out at about 1925. I think the absolute high here was 1933, if I'm not mistaken. So we are in a position where we've got this level of support that we can map and monitor. And zooming in on this level of support, we've now taken off of that level of support on the 9th of September. We came down, found support, and we're now in this new state of market, right? We're in this new movement. Now, we do have some diagonal resistances. Oh, it's time to change batteries. I kind of forgot about that. Let me do a quick intermission, and what I'm going to do is I'm going to quickly change these batteries up. Give me maybe 30 seconds, and then we should be good to go. Let me just see here. Okay, we're going to do a quick intermission. I'm going to change this battery really quickly, and then we're going to continue. I'll leave you some good jams in the meantime. 2 seconds. Okay, beautiful. We are back. So let's jump straight into where we left off. The beauty of technology, everything needs batteries, right? Okay, as I was discussing, we found support on ZAR on the 5th of September. We're now in this new state of market. So let's jump over to a 4-hour, and I want to show you what it is I'm talking about. So here's where we found that support, right? We re-hit that support. Now we're on this new state. There's a little bit of a bull impulse. Now, in terms of that, we have some diagonal market structure here that's providing resistance to ZAR breaking out. I 100% predict that we are going to be looking at 18, 19, 20, 21, 22 rand to the dollar before the end of this year. So I have a high likelihood or high probability of the South African Rand rallying up. Now, for the South African Rand to go up, USD ZAR means that the South African Rand is losing strength to the United States dollar, or the United States dollar is gaining strength against the ZAR, meaning it's buying more and more and more of the South African Rand. Okay, so that's why we are looking at that. Now, in this latest impulse, we're seeing a correction towards the downside. Is everybody in profit on gold? I think everybody's in profit on gold. Let me just double check gold. Yo, look at that profit. Well done, guys. You have just smashed dollar domination. So what you can do in gold, as I said, we've broken that structure. Reduce your risk now, move your stop loss into profit, and enjoy. What can we say? Enjoy the profits on gold. That's what it's all about. So this is the power of being a master student, right? This is the power of why we do the Quantum Growth Program, why we've provided all these things for free, is that you can come in and you can learn for free what is the markets about. But really being a master is about being daily with me in the markets, daily with me in all these shows. That's the value proposition of being a master student. So as long as everybody's in profit on gold and you're making some money, I don't know how many pips that is right there. That's about 150, 160 pips on gold alone. So well done. If this is your first profitable gold trade and you're watching us for free somewhere around the world, then just a massive, massive well done. In terms of ZAR, guys, so we have had this latest impulse towards the known resistance level, and we can see this is the impulse and this is the correction. So ZAR is busy correcting. As I said to my master students, we're going to be able to buy and sell as ZAR corrects towards a known fib level, and I predict that we could correct all the way down to a 61.8. And again, depending on the dollar's strength. So what I'm worried about on the dollar is that, you know, we hit this known fib fan once again. We hit that fib fan. We still have quite a bit of distance between us and that fib fan. We hit that fib fan, and then ultimately, you know, the dollar loses a bit of strength. That's the only reason why I think ZAR may correct until this next season, or this next impulse, that we can end up buying ZAR around about the 1452 mark. Is a strong level we've used in the past, which will then coincide with the 61.8, but we will then have the structure to buy and sell as we range or correct towards the downside. Another great trade that I am looking at very, very closely, there hasn't been enough fundamentals to allow this one to pop off, but it's definitely going to be Eurogbp. So Eurogbp, we have a triple bottom here. We have a once resistance acting as now support. We were hoping this would pop off a little bit earlier than where we currently are, but really failed to. But this is a far more convincing market structure. Now, where we're currently sitting at the moment, we can see that markets are pretty much dead flat on Eurogbp. So neither the euro or the pound is able to make any substantial gains. And what you want to watch out for here from a fundamental perspective is on Eurogbp, we need to look out for a situation, a perfect storm situation, where the euro gains some strength or the pound loses some strength. This would justify a Eurogbp long buy position, and this could be a substantial position from an investment perspective. This is more of an investment trade than any sort of scalp, right? Eurogbp has the potential to, you know, really move topside and make 500, 600, 700 pips. Again, this is why I don't trade too many forex pairs, just because the amount of time you need to wait. This is a daily time frame. This could take, as an example, right, Eurogbp could take a total of 20 or 30 trading days to get to 500 or 600 pips in profit, whereas something like VIX, at this point in time, you know, in the next 2 days, as an example, could hit 1,000 pips. So what VIX could yield in 2 days would take Eurogbp to a month of trading to yield. And remember, with Eurogbp, you're going to be paying swaps, you're going to be paying all these things every single night, and it can just, it's a waste of me to put my money into that instrument. But in the early days, it's great to trade forex, specifically in majors and minors, because the volatility is low, the market structures are pretty predictable, and that's why a lot of people tend to start off with forex and then get into more advanced things like your VIXs, your Nasdaqs, your gold, so on and so forth. So gold is thumping, guys. If I was you and you have more than one position here, you can close one position for absolute profit. And then what I would do if I was you is now move your stop loss into profit, maybe about 10-20 pips, somewhere around about there, and then you're at the investor seat, right? You're sitting at the investor seat. Even if gold pulls back, it'll take you out at a profit, and there's no way you can lose money on this trade, right? You are sitting as an investor, and this is what smart trading is about. I see a lot of these strategies, buy now, sell now, buy now, sell now, and people are trading for 20 or 30 pips. Right here, right now, there is 160 pips banked right there. What people try and trade in a week is done quickly on one instrument at one time, live with every single one of you watching, and hopefully all benefiting and making a profit. Anyway, so Eurogbp is another one, a potential trade. GBP USD, guys, I've spoken about this with my masters. I think this is something we really need to watch. I would have liked to have also taken this with the positive dollar data, but Eurogbp's got GBP USD rather. This is a 4-hour time frame. Beautiful market structure. We've got diagonal resistance, we got diagonal support also acting as resistance, and GBP USD has trended up into structure and then broken this triangle, and we've gone for that perfect retest. So I know some of you as my masters are selling GBP USD already, so if you are already in the sell, well done. If you aren't in the sell, then what I would potentially do or advise you to do is wait for this market structure to do one more pullback, and then we should start trending towards the downside. So getting into a little bit more detailed Eurogbp, if you've missed this trade already, what I predict we could end up seeing here from a range or market perspective is we might see a new structure that could be built. Let me change this line here maybe to back to blue. Okay, so we may end up seeing some sort of new structure that will look a little something like this. Now, I'm getting the structure off the fact that we've got all of these diagonal support levels, and it's pretty much telling us where it wants to be and where it wants to go. So if you've missed this trade already, it's going to make a push down probably to the 50, if not even a deeper push, maybe to the 38.2. We can see it spiked before. Wait for that pullback. The pullback might end up being in the vicinity of this 61.8. So what we might end up seeing here is a push down potentially to the 38.2 and then a pullback directly to the 61.8, and that will then allow you to get that second entry towards a sell and a new market structure towards the downside. So those are the trades that I'm looking at, guys. Again, I've been focusing a lot this week on getting material ready for my master students. There's a very big teaching happening on Thursday, but if you're not already part of the Signals group, guys, make sure you are in there. It is free. So in the Signals group, you're going to get daily trade opportunities. This week has been a bit slow, but we were waiting for new structure, new directions, daily trade opportunities. I think already last week or this week, we handed out about 500-600 pips worth of pure profit into trades into the Signals group. We are going to be improving some of the systems, improving some of the protocols, and it's free. There's nothing you need to do outside of following the steps. Open up your live account with the link that we provide. Go ahead and watch the quantum growth session or series. Go through each video. It's 8 hours of me teaching you everything you need to know to do exactly what I've done right here today live with you. It's all there and it's free. So make sure you obviously catch that, watch that, go through the series. It's also linked in the YouTube video that you're watching me live on right now. Go to the quantum growth playlist, and it's about 8 videos, 8 hours in total. I take you through everything you need to do exactly what I did today, right? The only thing different that I did today that would be included in the masters, all of the specific strategies on turning points and times and things you need to look out on different currencies to take advantage and absolutely smash the financial markets. That's obviously my master student. These are the people that I'm raising to take over the forex industry and trading industry throughout Africa. So if you want to be a part of that, let us know, drop it in the groups. We'll get you what you need to do and the requirements in order to become a master. But if you're not, make sure you're part of the Signals. If you're not a master or a Signals student, I do not know. This is where it's happening, guys. This doesn't happen anywhere else in the world right now. People say this, they say that. It does not happen anywhere else in the world right now. So again, you should be a massive profit on gold. Look out for those opportunities. I'm already in profit on VIX 75. Look out for ZAR, look out for Nasdaq, look out for Eurogbp as well as GBP USD. And that's what we have. That's how we wrap up this day. There's some big earning reports on some of the big banks and some of the big items, but there's always things happening in the world right now. There's nothing better. You know, people ask me, they say, will I ever stop trading? I don't think I ever will, right? I'll be sitting on an island, I'll be trading. I love taking the whole world's mess, making sense of it, making calculated predictions on the markets. And people say that the markets are random, people say the charts are random. I'd like to prove them wrong. I know it's not random, and you guys can see it for yourself. So otherwise, guys, besides for that, listen, I love you. We have Germiston, Botswana, Soweto. We have everybody in the house from all over the world. Guys, listen, Have yourselves an amazing day. Hope you've banked some serious pips on gold. And just be blessed, stay safe, trade safe as always, risk management and psychology over everything. Guys, this is Dane from us. This is DVDM Markets. I love you all. I'll see you all next Wednesday for the free edition for my masters. I'll see you tomorrow morning. Pips for breakfast, and then dollars for lunch is a powerful teaching for Thursday afternoon. Outside of that, guys, listen, I love you. Be safe, trade safe. I'll see you all next time. Shalom.